let's dive into some of the statistics that other sources may not necessarily be talking about. Look at sales. Year to date, just under 10,000 fewer sales than last year. Sales to new listings ratio, a balanced market is about 50%. We are sitting at about 45.8%. Only 45% of the new listings that are hitting the market are getting sold the central zone of Toronto, where all the transit, subways, and everything is. We are sitting at 41.9% as sales to new listings ratios and 3.1 months of inventory. So firmly in a buyer's market there. If you bought in a neighborhood that is trending upwards. I call it a market busting neighborhood, because whatever the market is doing, some of these neighborhoods are still trending in an upwards direction. And then people, this is Josh, broker with Sage Real Estate, Garrison Collective. This is your October 2023 market report. So let's dive right into things. Let's quickly recap the overall GTA market report. So sales were down 5.8%. New listings were up 38%, and active listings are up 50%. We're going to get back to that in a second. Those are some really big numbers. When we look at the average price, now this one's going to come at you as a little bit of a surprise, but prices were up overall 3.5%. So last year we were hovering just under 1.1 million at $1,087,000, and right now we're at 1.125 as an average. Really interesting that number is that high. However, later on in this market update, we're going to talk about what's happening when we look at the numbers from month to month. So that's the overview of the entire market. Now, because this is the Under the Radar Real Estate YouTube page, let's dive into some of the statistics that other sources may not necessarily be talking about. So let's first off look at sales. So year to date, sales are at about just over 58,000, 58,367 to be exact. Now, last year at this time, we were sitting at 67,452 sales. Now, last year was already a down year for total sales, and we're trending lower. We're, just under 10,000 fewer sales than last year. Now, why is that? Now, obviously, interest rates remain high, number one. Number two, because interest rates are high, we're actually seeing a lot fewer move-up buyers, people that would typically, let's say, move from a condo to a townhouse or a townhouse to a detached house, so on and so forth. We're seeing much fewer of those types of transactions because people now, especially if they're locked into a rate that doesn't renew for another year or 2 years or 3 years, there's really not that type of incentive to move into a more expensive property right now, especially if they have to break their mortgage and take on more debt at a higher interest rate. All right, now we said we would also talk about listings. Listing activity is up quite a bit. When we look at some of the advanced metrics when it comes to listing activity, we look at two advanced metrics: months of inventory and sales to new listings ratio. So months of inventory is if we were to stop listing properties as of right now and not sold another property, it would take just the amount of months it would take to sell off all of the inventory. So right now we are sitting at about 2.6 months of inventory. A balanced market is 2.5, so we're slightly high. And when we look at the sales to new listings ratio, so this is as the name suggests, the amount of sales versus the amount of new listings hitting the market. A balanced market is about 50%, so 50% of new listings are getting sold. We are sitting at about 45.8%, so only 45% of the new listings that are hitting the market are getting sold within that given period of time. That signals to me that we are firmly in a buyer's market, right? A lot of supply, and it's not getting snapped up, and there's not as much demand. Now, one thing I've noticed is a couple of interesting trends. So when we look at the east, west, and central areas of Toronto, I've noticed a very under-the-radar stat that not a lot of people are talking about, is that in the west of Toronto and in the east, we are still in a bit of a seller's market, shockingly. I'll rhyme off these numbers quite quickly. In the west, we're sitting at a sales to listing ratio of 48%. So kind of tilted a little bit towards buyers, but still in that middle zone. Months of inventory is at 2.4. Again, balanced market is at 2.5. So there's not as much inventory available in the West. It's still a decent amount of demand. But pricing is just over $1 million at $1,029,000. It's almost $200,000 less than the overall average in the GTA. Then when we look at the East End, these numbers surprise me even more. We are sitting at 53% sales to new listings ratio. So 53% of new listings are getting sold in the East. And this, when I talk about East, it's basically east of the DVP, the Don Valley Parkway. And I should actually note that in the West, it's generally west of, let's say, about Lansdowne in the West. And that's city of Toronto proper. I'm not talking about suburbs. So in the East, then, months of inventory, this was a big surprise. We're sitting at 1.8 months of inventory. So it would take less than 2 months to sell off all of the inventory in the East End. These numbers are very much seller's market numbers. The average price also in the East End is $1,023,000. Again, another $200,000 discount over the overall average in the city of Toronto. So if we compare this to the central zone, so the central zone is basically the Don Valley Parkway over to about Lansdowne in the west, from the lake all the way up to Steeles. So the kind of central zone of Toronto where all the transit subways and everything is. In this area, we are sitting at 41.9% as sales to new listings ratio, so firmly in a buyer's market there, and 3.1 months of inventory, 0.6 months above the balanced market at 2.5. So it would take over 3 months to sell off all the inventory in the central zone, and the pricing is sitting at $1.246 million. So pretty much bang on with the Toronto average. So if people out there are still looking to purchase real estate, it's a lot more cost effective to buy in the West End of Toronto and the East End. So we can clearly see that the market is still in flux. We are trending towards a buyer's market. Some neighborhoods in the city of Toronto are firmly in a buyer's market right now versus a balanced or a seller's market. Now, when we look at pricing is still up when we look at numbers year over year. As you know, if any of you have been watching a lot of my market reports, I really don't like the year-over-year price comparisons because it's not really a great indicator of where we're at. I like to look at month-over-month because it kind of shows a trend of where prices are typically trending. So when we look at the month-over-month statistics, when we look at 2022 to now, the high of 2022, we are nearly at 1.3 million. And that was back in March of 2022. So March of 2022 to now, we've dropped almost $200,000 as an average in price over that period of time. So while numbers, if we look at October of 2022 to October 2023, sure, they're up year over year. Now, there's a lot of factors that can influence year over year numbers. Perhaps last October, we saw a lot less detached houses and pricier homes trade. So it may affect price. That's why, again, I like the month over month because it's showing price trends. So we saw pricing quite elevated in 2022 and progressively got lower as time has gone on. So when we look at the advanced metrics that we just talked about a market trending towards a buyer's market, and then we look at the trending in pricing, it's very clear to me and to some other realtors and some other people who track real estate that we are currently in a buyer's market, and we're likely going to be in this buyer's market for the foreseeable future. Now, what are some things that could influence and change these things? Well, some interest rate decisions could perhaps spark the market to get back to its normal ways. Now, in my opinion, I believe now we're either at bottom or close to the bottom in terms of pricing. And in my opinion, I actually don't think we're going to see pricing necessarily skyrocket back up again. I think we're going to be now in this period of stasis for a year, maybe longer, where pricing is going to be relatively flat. We aren't really going to see overall big price leaps and price jumps in the market. Now, as a seller, you could be hearing this and be sweating right now and worried about, well, if I want to make a move up buy at some point over the next 6 months, a year, 18 months, what am I going to do? I don't want to be underwater. Well, depending on when you bought, if you bought prior to 2020, you're likely already quite a bit ahead in terms of pricing, even though the market has pulled back a little bit. You likely bought at a period in time where pricing was quite a bit lower than what it is today. So you've already made some equity. And if you paid down your mortgage over that period of time and not take on too much debt, you should still come out with a little bit of extra cash in your hands to make that move up buy. But another thing I'm telling people is that even in a down market, I'm still noticing that properties that are 8 out of 10, a 9 out of 10, or a 10 out of 10 in some buyers' eyes are still getting pretty good numbers. A lot of properties, I call them the bells of the ball, are still getting multiple offers in some cases, are still selling for well above what a lot of other either units, whether it be a condo or houses in a neighborhood, are getting versus what some of the neighbors are. And these are people who invested in their property, did some minor renovations, did some updates, staged, made sure their houses are in tip-top shape, not dirty. Sometimes you'll see a house in photos, you're like, oh wow, it looks great. You go in and there's mold in the shower and dirt in the corners and cobwebs on the ceiling. People who really take their time to prep their home and get it ready for sale are still seeing some pretty good numbers. So I still think that you can still achieve a pretty good number and still make that move up buy and actually still beat the market if your property shows well, or if you bought it in a neighborhood that is trending upwards. When I bought in Fairbank, I knew Fairbank was on the way up. I knew that Fairbank and a lot of these neighborhoods that we like to cover here on Under the Radar, these are neighborhoods that are beating overall market. I call them market busting neighborhoods, because whatever the market is doing, some of these neighborhoods are still trending in an upwards direction, whether it be because of transit or development, whatever else is happening in that area, changing demographics. And when you're either buying in those neighborhoods or investing in your property, there's still a lot of ways where you can still sell your property at top value and still make that move up buy that you need to potentially make or want to make in the future. So that's it. That's my take right now on the overall market in the city of Toronto. If you're looking for real estate, whether it be in some of the under the radar neighborhoods that we talk about on this channel or anywhere in the city of Toronto, be sure to hit us up. Our contact info is located down below in the description. You can hit us up via email, book an appointment on Calendly, make a comment on this video. We'd be more than happy to help you out and be a real estate resource of choice here in the city of Toronto. That's it for this market update for October 2023. Once again, I'm Josh, broker with Real Estate. Peace out.